let's rewind all the way back to 2021-year-old Charlie. Would you
wait, rewind to 2021-year-old Charlie? I know it sounds like the year.
Sorry,
let's just rewind to when I was 21. Gotcha.
Yeah, I was thinking about 2022 and I was trying to minus one off on the fly. So 21-year-old Charlie, would you even buy a PPR or just go rent investing?
Yeah, so mathematically rent vesting makes sense. Now, the reason I probably still would go back and do it is like, and this is luck, right? Because this doesn't happen to people. The place we bought, right, which I have to share this, I literally bought this place because it had a good garage.
It's an amazing garage. I won't lie.
It's a fantastic garage. It's a really good garage. I liked the dynamics of the property because it had a really good garage, as I've said about 10 times now, but then a massive front yard for parking and like just a really good block of land. There's a lot of things going for it. Mind you, I didn't do any area research. I didn't do anything else that would go into buying an investment property. Just turns out, however, that that's a highly desirable suburb with a premium school zone that people really like. So and this is luck and not something that I could have even known at the time, that asset has gone up immensely in value. Like it's done really well. It's experienced a lot of growth and it's nearly tripled since I bought it.
Yeah.
So when you look at that as a footstone of what's enabled me to do more things, is like that definitely played a factor. I'm not going to deny it. So for me, would I go back and buy the PPR? Questionably, it was a good decision. Even if I rented it out and treated it as an investment property, it would have been fantastic to do that. I needed the security at that point in my life, I won't lie. So for me to feel safe and all the things that come with it, yes, I would have done it. However, mathematically, terrible idea. If I'd have just focused on investment properties with a relative LVR, so let's say I kept my LVR at like, I never went above 70%, so really conservative in the property world. Today, that portfolio would be able to support paying an expensive mortgage.
Yeah.
So you just got to be when you capitalize into that, which I think is an interesting idea.
You, like coming back to the concept of like paying down debt versus like continually investing more aggressively, you know, like this point that I just talk to so many people around, which is like the sleep at night factor or like, where is your comfort spot? And so to the question that I asked you around like, would you even buy a PPR if you had your time again? That was kind of where Haz and I were, which was, do we need that security of knowing that, hey, this is our place? And to be honest with you, it's not like a flat decision. It's every 3 months, the opinion changes. and if Hazel gets pregnant at some point, I'm sure the opinion will change again. And I think that it's not just a set and forget. It is as you go through the seasons of life, you will feel different about what you want for security in order to make or not make the decision of buying an actual PPR. And then if you do have a PPR, walking through this, like in my mind, I'm like, cool, if I had a PPR, would I continue to pay it down or would I look to continue to invest? The first thing I'm going to look at is my personal sleep at night factor at that point. And this is so different for so many different people, right? Like how many people have we seen that have got 95% loan to value ratios on their property investment portfolios that I would freak about? I'll be like, I wouldn't be sleeping. I'll be like, eyes wide open going, how can I earn some more money to pay down this debt? But then other people that just don't have any debt. And I'm like, that's so risk off completely. And it's just more like horses for courses where I'm not that risk aggressive of going, hey, just light it up to the tilt and just go ham on buying so many investment properties. But to the point where I would go and reassess and say, if I'm sitting at, to your point, like 70%, maybe I would reassess personally, again, not financial advice, that I'd go again as opposed to maybe I just want to keep paying stuff down.
I would go as far to say as this is the most important factor is the sleep at night factor.
Totally.
I know some investors right now, and it's funny, it's like I won't name this person just because they may not want this being shared, but someone who we know who is semi-associated with the show, put it there, happily buys things on 90% with LMI while interest rates are going up and is having a great time and sleeps very well.
How? Are they a vampire or something? Oh my gosh.
Well, they've got a really good long-term fundamental belief that it's a great idea.
No, I get you.
And then I know other people where it's like they've got like conservative, like they make me look risky. Yeah, and I've just said that I paid a house off before investing, right? But it's like, And for them, it's like that an interest rate goes up 0.25 and it's like, man, they're stressing about it. So that's why this is such an individualized thing, is like very different situations and very different outcomes. You could be someone with a huge amount of debt, sleep really well at night, or not, and that's you, right? You are the factor in that. I think for anyone out there, and this is what I've done and I believe you've done as well, I had to develop a set of rules. Yep. So I know for myself that when my portfolio, I have to contribute money to it, right? So I'll tell you right now, I'll go through this. My portfolio now, very reasonable size. I've covered it. I've got 11 properties on the show at about 16 doors. If I have to contribute income to support the portfolio, I'm going to focus on paying down debt until that doesn't exist. Like, that's a real big trigger. It's not time to go again for me if it's going to create like a negative gearing scenario. So I don't like that. As soon as the portfolio needs my income, sleep at night factor becomes uncomfortable. I also wouldn't be comfortable seeing my LVR go above 70%. Like, and even today, my LVR is much lower than that. But again, I wouldn't want to invest more. I would pay down debt in that scenario there because that's what makes me comfortable. I think they're the things that really sit well with me. So they're kind of two for me. Is there anything that sits on your rules in this world? Do you treat it the same or different?
Yeah, so very similar. It was funny because the way that the question was like prefaced was like the volatility of the current market, which is like maybe interest rates go up, maybe they go down, maybe prices go up, maybe prices go down. Like, just the volatility creates that uncertainty. And so in the second half of 2022, I looked at my portfolio and I said, how do I feel about that volatility? And to riff off the point that you just mentioned.
Oh, we could do a Dr. Phil episode if we're going to go to feelings. Shall we do this? Like, Grant, how did that make you feel?
Totally. Well, it was the sleep at night factor. It was me going, if I get another one, Charlie, I'm probably going to make different decisions in what I do day to day, which I'm not going to be happy with. And I run a business and I reckon I would make desperate decisions in the business. And if you're an employee, maybe you choose to get a second job just to deal with
completely.
That risk.
And you see it, and it's like it wears it. You see people age really quickly when they do that.
And because they've made, and a lot of people actually make the decision without realizing, and then it's a byproduct of a really bad decision of them going, oh, now I've got to work 2 jobs, or now I've got to make decisions in my business that I shouldn't make or don't want to make. And so I said, I'm just going to pause. And you know what's funny, Charlie? I'm like, what is the problem of me pausing? What is the risk? Really, if I just stopped for 1 month, 3 months, 6 months to reassess, really what's the problem? I'm going to pay down some debt, or I'm just going to stack some cash and offsets. You know?
The lack of progress, like people need progress in their life, and to pause and slow down and intentionally go, do you know what? I'm going to intentionally take longer to achieve my goals. I think people really struggle with. I think mentally that's very difficult.
And in that period that I paused, which wasn't the whole 6 months, and I'll be transparent, like I am investing again, like going out looking for a new investment property.
Yeah, fuck yeah, you are.
But the
accumulator,
dude, my LVR during that period went from 68% down to 51.3%.
Well, if you had invested in that time, you actually would have done reasonably well following your strategy. That's the irony, right? It's like it stings a little bit, but it's a long game. You have to play the long game.
All right, fellow property investor. If you loved the value from this short video and wanted to know more about how you can win at property investing, check out the full episode by clicking the link on your screen or in the description right now. Alternatively, click subscribe and you'll never miss another one of these videos.